You probably missed it while you were asleep. 6 hours ago, the silver market didn't just shift, it broke. Not a rally, not a correction. It snapped in half. While most of the West was sleeping, the East printed $100 per ounce on physical silver. And yet your usual financial media, your CNBC, your Bloomberg, are calling it a glitch, a localized anomaly. They hope you'll scroll past this, keep checking your retirement account, and ignore it. But here's the reality. The screens you're seeing in New York and London, they're lying to you. This isn't just a price move, it's a complete regional decoupling. And it happened overnight while most of America was asleep. History was made, the kind of history that doesn't get the headline it deserves until it's already too late to act. But here's the part nobody is saying out loud. This isn't just about a number on a screen. The $100 price tag on silver in Shanghai, that's the smoke. The real fire is what's happening to the Western vaults, and that's moving faster than anyone anticipated. Physical silver is disappearing from the Comex and the LBMA at an alarming rate, and it's happening right now. You're not hearing about it from the financial media because it doesn't fit their narrative, but it's happening. Now, let me ask you, if a price spike like this is ignored by the media, can we really trust the safe markets back home? You're being fed a version of the truth that doesn't match what's unfolding. And it's not just a price rally. This is a structural reset. What does that mean for the average investor? And why is it so important that you see it before everyone else does? Here's the truth no one is telling you. What we're seeing is more than just a spike. It's a collapse of market structure. The arbitrage gap, the price difference between East and West, just hit 1389. That's not a spread. That's a chasm. And it's widening by the hour. So why does this matter? Because a gap like that isn't just big, it's unmanageable. It's forcing silver out of the Western markets and draining physical metal faster than the paper market can print contracts. The Comex can churn out contracts all day, but they can't print physical bars of silver. And right now, the East is gobbling it up while the West is stuck staring at a system on the verge of collapse. Notice what's missing here. The mainstream media hasn't even begun to address the real implications. They're stuck on the numbers, not the structure of the market. But here's what's coming. The price reset isn't just a possibility anymore, it's inevitable. And the question is, will you be ready when it breaks? Now, things are about to get even more intense. Let me show you just how quickly this situation is escalating. Think about it. Silver just outperformed gold by nearly 4 times overnight. And when silver moves that fast, when it outperforms gold at that ratio, you're no longer in a normal market. You're in the parabolic phase. This is the phase where everything shifts. By the time the so-called experts figure out what's happening, the opportunity will be long gone. You're in a market that's moving so fast, it's almost impossible to catch up. But here's the real kicker. Silver's performance isn't just a lucky break. It's the signal that the system is fracturing. Let's be clear, this isn't about some abstract chart pattern. This is a real breakdown of the financial system. And the worst part, it's happening right under the radar. While the mainstream media tells you everything is fine, the foundation beneath us is starting to crack. But it gets worse. What you're seeing now is just the beginning. The data I'm looking at right now, it's not just showing a price shift, it's showing something much darker. The arbitrage gap between East and West isn't just big, it's unmanageable. And when that happens, the physical silver starts to move fast. The Comex and LBMA are stuck in a situation they can't control. And here's the contradiction. The Western market says silver is under $90 per ounce, but in Shanghai, it's already $13 higher. What's the gap? A $13 difference between the price you see in New York and the price you'll pay for silver in the East. This isn't just a pricing issue, it's a structural issue, and it's about to break wide open. Think about it. If the West doesn't close this gap, the entire physical delivery system could snap. People will stop settling for paper contracts and start demanding physical silver. And once that happens, there's no turning back. The floodgates will open and the Western vaults will run dry. Things are spiraling faster than anyone expected. In the past few hours, I've seen multiple signals that the situation is about to blow wide open. Here's what's happening. Vaults are emptying and the pressure is stacking. The Comex, the LBMA, they're watching their silver reserves disappear. You're seeing it firsthand in the data. But that's not all. The system is crumbling under its own weight. We're seeing things unfold that are shaking the very foundation of the market. The Comex can't print physical metal, but they can keep issuing paper contracts. But that doesn't work when the arbitrage gap is this big. What happens if this continues? The physical supply starts vanishing completely. And when that happens, prices will spike. The question isn't if, but when, and how high it will go before it collapses back down. The system has already started to crack, and it's only a matter of time before everything tumbles down. Now let's zoom out and focus on you. What does this mean for the average person, the ordinary retail investor who's been watching from the sidelines? When the silver market breaks like this, it's not just a financial shift, it's a real-world problem. People like you who've been holding physical silver are about to see that value explode. But there's a catch. This market isn't just about making profits, it's about survival. Think about what's at stake. Silver's not just an investment, it's a way to hedge against the system that's starting to crumble. And the most important question is, what happens if the West can't fix this gap? If the East keeps pulling silver out of the vaults, there's only one direction the price can go: up. Now, I'm not here to tell you what to do with your money, but if this feels familiar to you, if you've been holding on to physical silver for years, waiting for this moment, drop a comment below. Let's talk about the reality of this. The system is changing, and the question is, will you be ready when it hits? Here's where it gets unsettling. What's really driving all of this? It's not just the silver price, it's the system, the mechanics behind it. And if you're not paying attention to how the system is designed, you're missing the bigger picture. The financial world is built on leverage, spectacle, and fear, and right now those forces are in overdrive. Think about it. The silver market isn't just a reflection of supply and demand anymore. It's a game of incentives. The Comex, the LBMA, they're all trapped in their own system. They can print paper contracts all day, but when physical metal starts draining out, they have no control. It's a pressure cooker, and they're running out of time. But here's the key insight. This is bigger than silver. It's about the entire financial structure. The power of physical markets is being tested. Right now, you're watching the most powerful players in the world, the institutions, the governments, struggle to keep control, and this is only the beginning. So what's coming next? The truth is, we're at a fork in the road, and we could go in two very different directions. First, there's the path where the price continues to rise, but only because the Western market starts acknowledging the Shanghai premium. If that happens, we'll see silver push towards 130 and beyond quickly. The momentum will be undeniable, and the world will scramble to adjust. But here's the catch. That might only be the beginning. Then there's the alternative scenario. The gap stays wide, and the pressure continues to build. If the arbitrage doesn't close, the system is forced to react, either through margin hikes, regulatory changes, or worse. In that case, the market could break before it even has a chance to spike higher. We'd see a massive collapse, and the next move might not come for months. The question is, which path will we take? The next few days are critical, and the move that's about to happen is already in motion. The momentum is building, and it's unstoppable. Here's the one thing you need to take away from all of this. The numbers don't lie. The Shanghai premium is real. The arbitrage gap is real. The drain of physical metal from the West is real. The gold to silver ratio, it's collapsing right before our eyes. And yet if you turn on the mainstream media, they'll tell you everything is fine. They'll try to calm you down, but they're not telling you the full story. The real question is, are you ready for what's coming next? Because once silver hits 130, and once the mainstream wakes up, it will be too late to act. If you're sitting on the sidelines waiting for the right moment, that moment might already have passed. So here's what I want you to do. Watch the market closely. Pay attention to the $91 level. Watch the gold to silver ratio. And most importantly, don't let the media lull you into complacency. The time to act is now. And if you're serious about positioning yourself, you need to stay ahead of the game. Subscribe for real-time updates. Follow for more analysis. And leave a comment below. Let me know what you're seeing in your local markets. Are premiums rising? Is inventory starting to disappear? This is how you stay ahead of the curve.